All right, let's get straight to it. This is your operational briefing on the all-time high flash crash.
I want to start with just one number, 7.
That's how many times since 1985 the market has flash crashed from an all-time high exactly like it just did. So, this isn't just another choppy day. This is a big deal, a historically rare event. And for a serious operator, this is not a time to panic. It's a time to pay very, very close attention. So let's cut through all the noise, right? Let's get past the headlines and really break down the anatomy of this flash crash. We need to understand the mechanics of what just went down. Look, I know this was painful. You just watched a violent sell-off right from record highs. And just to put it in perspective, in the crypto space alone, this thing liquidated over 1.5 million accounts. The damage was absolutely real, and it was everywhere. Now, let's talk about the market's fear gauge, the VIX. It definitely spiked, right? It hit 21. And yeah, that shows concern. But let's be crystal clear here. Real, full-blown panic, the kind that signals a true market bottom, that doesn't usually kick in until the VIX is sitting above 25. So what did we see? We saw fear, for sure, but we did not see capitulation. Not yet. And that brings us to the next critical piece of this puzzle. Because this wasn't some random act of the market. No way. This was targeted. This was, plain and simple, a retail liquidation event. The media is going to give you a million different reasons for the drop. They'll talk about tariffs, tweets, all that geopolitical noise. But as an operator, you have to see that for what it is. It's cover. The market reality, what was really going on under the hood, was a purge. A massive purge of all that historic retail leverage that had built up. The setup was perfect. Just before the crash, we got what we called the retail all-in signal. The data showed the single largest inflow of retail demand ever recorded. Think about that. The last time we saw anything even close to this was, you guessed it, right before another huge sell-off. It's the classic story. When everyone piles onto one side of the boat, that boat is going to tip. They become a predictable target. And the signs were literally everywhere if you were looking in the right places. We saw record money pouring into those 3 by leveraged ETFs. Sentiment surveys, they showed that basically all the bears had just disappeared. And then you see the result, right? Over 1.5 million crypto accounts get wiped out. And at the same time, some random account pops up making $88 million shorting Bitcoin in just a few hours. Come on, that's not a coincidence. That was an inevitability. Okay, so this leads us to the most critical part of this whole briefing. What is Wall Street's real playbook here? What was the actual goal behind all this chaos? At STOA, we have a core principle that guides everything. Watch what they do, not what they say. You got to forget the public statements. Forget what the talking heads on TV are saying. An operator's only job is to analyze the flow of capital and the real actions in the market. That's it. That's the only ground truth. And honestly, the playbook is as old as time itself. You wait for a market that's euphoric and way over-leveraged. Then you use some news event as the perfect excuse, the perfect catalyst, to engineer a sharp drop. And what's the objective? It's simple. Liquidate all those weak, over-leveraged hands and scoop up their assets at a massive discount. All right, so we get the anatomy, we get the motive. Now let's turn to the history books. What does the data actually tell us about what happens next? And history gives us a pretty clear roadmap. For the next couple of weeks, expect a ton of volatility. We could easily see more downside as this whole liquidation process plays out. 3 months from now, it's a mixed bag, kind of 50-50. But, and this is the key, once you look out 6-9 months, the returns have been consistently positive. Historically, that's just what happens. And if we look at specific examples, it really drives the point home. Yeah, you had the dot-com crash in 2000. That was the start of a real bear market. But then look at 2020. And even more important, look at 1998. That's probably our closest historical comparison. In both of those cases, these nasty, violent drops were just shakeouts. They were designed to flush out all the leverage before the market took its next big leg up. So you see, this completely reframes the situation. You have to stop asking, is this the top? That's the wrong question. The crucial thing to understand is that these events are engineered for Wall Street to buy the dip, period. So the question isn't if they're going to buy. The only question an operator should be asking is where are they going to step in? Which brings us to the most important part of all of this, your operational framework. How do you actually move forward from here with a clear, actionable plan? Because that's the ultimate challenge right now, isn't it? In this kind of environment, how do you separate the real signal from all the deafening noise? How do you operate with absolute clarity when it feels like everyone else is running around with their hair on fire? The answer isn't a prediction, it's a process. And this is our 3-point STOA framework. Step 1, you track dark pool activity. That's where you see the large non-public institutional money moving. Step 2, you identify the key volume levels. These are the areas on the chart that act like magnets for price. And step 3, you wait. You wait patiently for a structural confirmation, something like a double bottom, before you even think about taking action. And to get super specific, here's what we're tracking right now. For the S&P 500, a pretty standard mean reversion target is down around the 6,400 level. If we break below 6,550, that could signal a much deeper move is coming. The confirmation pattern we're looking for is that classic double bottom base to show things are stabilizing. And just remember, this one key data point. In a waterfall sell-off like this, Friday is almost never the final low. So that leaves us with the ultimate question, right? Is this the beginning of the end? Or is this just the last great liquidation we needed to clear the decks before the next major move higher? The thing is, the answer isn't going to be in the headlines or in some guru's prediction. The answer will be in the data, and it will be in the process. Look, if you've made it this far, you're not just curious. You're serious. And that is exactly who Stoa was built for.
Here's the deal. We don't accept everyone. We run on an application-only system because, frankly, we only work with operators who are ready to get to the next level.
So if you're done wasting hours chasing noise, and you want to run a proven, documented process that actually gets results in less than 90 minutes a day, then it's time to apply. There are limited seats, and once they're gone for the quarter, they're gone. Click the link in the description, fill out the short application, and let's see if you're a fit. My guess is if you're still watching this, you already know you should.